reduce below the 9%. That is the context.
ඒක මම අහන්නේ මිස්ටර් ෆොන්සේකා මේක දිගටම 9ට දෙනවද නැද්ද කියන එක.
No, not දිගටම. It is a bit
until 2026.
මට තියෙන මේ පටලැවිල්ල තමයි මිස්ටර් ෆොන්සේකා දැන් ජනතාව බලාපොරොත්තු වුණේ මොකද්ද ජනතාවට අවසානයේ ලැබෙන දේ මොකද්ද කියන එක පිළිබඳව මේ එකමද නැත්නම් දෙකක්ද කියන එක. ඒ කට්ටිය අවම වශයෙන් 109ක රිටර්න් එකක් බලාපොරොත්තු වුණානේ.
එහෙම මට එහෙම හිතන්න ඉන්ටරෙස්ට් රේට් 102 නම් අනිවාර්ය 9ක් බලාපොරොත්තු වෙන්නේ නැහැ.
මෙහෙමනේ දැන් මෙතන කියවුණා 102.5 කියලා ඊළඟරත්න ඇමතුමාගේ නීතිය. හැබැයි ඊළඟරත්න ඇමතුමා ওই නීතිය කියනකොට 1958 ඔබතුමාත් හොඳට දන්නවා ට්‍රෙජරි බිල් තිබ්බේ 101යි. එතකොට මගේ ආගියුමන්ට් එක තමයි ගවන මේ ඊළඟරත්න මහත්තයා කිව්වේ රියල් රිටර්න් එක. nominal return එක වෙන්න බෑනේ මිස්ටර් ෆොන්සේකා.
මම කියන්නේ 102ක් හරි කියලා. ඒක කියනවා නෙමෙයි.
නෑ නීතිය නෑ මේ ගවන නීතියේ මේ රියල්ද නොමිනල්ද කියලා නෑ.
You're watching the Lifetraveler channel.
Welcome to the Committee on Public Finance, our quarterly meeting. It's always a pleasure and a privilege to have all you ladies and gentlemen here. As per the Central Bank of Sri Lanka Act number 16 of 2023, we are supposed to meet regularly, and this is a conduit. Now that you are an independent agency, this is the conduit through which you formally establish and maintain the link with the legislature. So this committee has a responsibility. And also there is another matter, and that is also part of this law, that if you miss the inflation target up or down, you're supposed to make some explanations, and that also calls for a meeting at this committee. So we usually combine these two, and that is what we are doing today for the second time, as a matter of fact. Once again, welcome to the committee. Would you please, Dr. Dunusingha, starting from you, identify yourselves for the record.
I am Priyanka Dunusingha, appointed member, Monetary Policy Board.
I am Ravi Ratnayaka, member of Governing Board and Monetary Policy Board.
I am Nandalal Virasinghe, Governor, Central Bank of Sri Lanka.
I am Nihal Fonseca, member of the Governing Board and Monetary Policy Board.
Vish Govindasamy, member of the Governing Board and Monetary Board.
I am JPR Karunaratne, Deputy Governor of the Central Bank of Sri Lanka.
Anushka Vijayasinghe, appointed member of the Governing Board and the Monetary Policy Board.
Manil Jayasinghe, member of the Governing Board and the Monetary Policy Board.
Nilumani Dawalagal, Senior Deputy Governor.
Sujita Jagajeevan, Director of Economic Research and Deputy Secretary to the Monetary Policy Board.
I am Lasante Sirimana, Chief Accountant, Central Bank.
Inoka Mohutti, Assistant Governor.
Ruwani Gunasekara, Assistant Governor.
Sirikumar Kodakama, Assistant Governor.
Dimutu Samarathunga, Assistant Governor and Secretary to the Governing Board.
Inoka Vikramasinghe, Director Legal.
Shanuri Jayasinghe, Director Non-Bank Supervision.
Nihal Lienage, Superintendent of EPF.
Samudra Jayasundara, Director Policy Review and Monitoring.
Dulani Ranasinghe, Accountant.
Vasat Alvis, Director Payments and Settlements.
Lasita Padberi, Additional Director Economic Research.
Priyanta Tilakavira, Director Macroprudential Surveillance.
Sureka Kattawala, Additional Director Bank Supervision Department.
Prabhat Gamage, Director Human Resources.
Erandi Lienage, Additional Secretary and Secretary to the Governor.
Hemanta Ekanayaka, Director Communications.
Ayesh Arya Singh, Additional Director, Financial Intelligence Unit.
That's quite a contingent you have brought, Governor, today. We also have a fairly strong contingent on this side. Okay, let's get started. We have four documents that you have submitted to us. The first one is the function of the central bank as per section 82A of the Central Bank of Sri Lanka Act for the first 4 months of the year 2025. I believe you are making a presentation. The second one is a report on the deviation of headline inflation from the IT set out in the Monetary Policy Framework and Agreement. You are going to combine that with the first one. Third one is annual economic review of the Central Bank of Sri Lanka, which you are tabling. And the fourth one is the financial statement and operation of the Central Bank of Sri Lanka. That is for last year, that which is also going to be tabled. So we have one presentation combining 1 and 2, and then we can perhaps have a discussion on the third and fourth one as necessary. Right, shall we start?
Yeah, thank you, Honorable Chairman. I think the reason that we brought all this stuff here, especially for the first one, report function of Central Bank Q1, first 4 months of 2025, where we are covering all the functions. That's why all the relevant department heads of departments are also here in case if you have any clarification. With that, I think we have one presentation combining the breach report and also the functions. So that together, I'll invite Director Research, Dr. Sujitha Jagajivan, to make the presentation first, and then we can open up questions or comments, please. Thank you.
Good afternoon. As Governor explained, we have combined the discussions required under Section 80, subsection 2.
Dr. Sujitha, how long do you think you need?
For presentation, half an hour.
Okay, should members ask questions while you are presenting, or you want them to wait till you finish? While presenting?
Yeah.
Okay. Okay. So clarifications now and substantial discussion subsequently. Thank you.
So let me start with the requirement under Section 80, subsection 2. It requires Governor and the members of the Governing and Monetary Policy Board, Deputy Governors of the Central Bank, at the request of the Parliament, to be heard by the Parliament or its subcommittee in every 4 months. We last reported in January, and this is the second time we are meeting this year. And let me start with the objectives of the central bank. The primary objective is to achieve and maintain domestic price stability, and other objective is secure the financial system stability. So today's presentation has been summarized under these two objectives. Under the price stability, I will be talking about the monetary policy discussions as well as the report that is required under Section 26, subsection 5 of the CBA that requires an explanation on the inflation target breach. On the monetary policy decision making, the monetary policy stance remains increasingly accommodative since June 2023, and the policy stance was further eased in 2024 as well as in 2025. And several factors have contributed to this continuous easing of policy stance, mainly the subdued inflation, well-anchored inflation expectations, continuation of tight fiscal measures, as well as strong external sector performance. With these, last year we had around 125 basis points policy rate cuts, and the recent policy easing was effected in May, with 25 basis points decline in the policy interest rate. With this, the easing cycle, which started in June 2023, the policy interest rate has been reduced by 8 percentage points.
So it was how much?
8%.
It was
615 2023, 125 in 2024.
Yeah, so what was it then? 16?
15.5 to 16.5.
Now there is only one.
Now one rate, 7.75.
So can you explain that a bit?
The single policy interest rate?
Yes.
Okay, so in November 2024, the Central Bank decided to move to a single policy interest rate,
From
from
your
the dual policy interest rate that we maintain, that is standing deposit facility rate and standing lending facility rate.
Okay, now
So
tell
that
us
forms
why
a
you
corridor.
did that.
So we wanted to give clear signal to the market so that there will be better communication about our policy stance, and also for a better transmission of the policy rate. Because what we see is when there are two policy interest rates, the market doesn't know where to place the interbank rates. It can be either towards the lower end or upper end, or maybe in the middle.
What
So we have
is,
a
should it
1%.
not be based on the liquidity in the marketplace at the time?
It partly affects, but also from the policy side also we have to give a clear guidance to the market. Where do we expect, as per the stance, where do we expect the market rates to be? Then if that deviates, if the actual rate deviates from the rate that we are expecting, then we do operations to make sure that it comes to the expected level. When we have a corridor, that signaling wasn't that clear. So we wanted to give a clear signaling to the market. So this is where we want the...
So the signaling you want to give is for the market rates to be as close as possible to your...
To the
that
overnight
is the
policy.
daily call money rate.
Yes. Average call money rate is the operating target of the inflation targeting framework. So we want that to be aligned with the overnight policy interest rate.
So the average call money rate is your target rate for...
The interbank, the short-term rate.
So and is that the 7.75 is that?
That is our policy rate. Overnight policy rate is 7.75.
Yeah, but you want the call money rates
yes.
to be close as possible to that rate.
Yes, currently call rate is 7.74.
So what is the variance? How has it varied over the last since you changed it?
It has been less than 5 basis points.
5 basis points?
Up or down, yes.
Since you changed it in November.
November.
Prior to that?
Prior to that, because market didn't know where to have, so we have seen most of the time it was in the middle, and depending on the liquidity conditions, if there is excess liquidity, we have seen the rates to be closer to the lower bound. When there is shortage liquidity, towards the upper bound.
So you said you manage it on a daily basis, no?
Yeah.
So your open market operations have been heavier or lesser since the single rate?
So in the recent time, we had a different problem because the asymmetric distribution of liquidity. So even though overall...
Meaning between local banks and foreign banks or what?
Yeah. Even though overall liquidity has been surplus, we have seen certain units have been deficit, and there were issues in market transacting and settling among themselves. So because of that, even though we had surplus liquidity, we have been supplying liquidity through reverse repo auctions. But so that we stopped latter part of last year, and we completely stopped the short-term auctions. We stopped somewhere latter part of last year, and overnight reverse repo auctions we have stopped in February. Now no operations because the rate is very closer to the overnight.
No operations now?
No. So they can come to the standing window, but we are not having regular
So you
auctions.
mean to say you don't do open market operations anymore?
No auctions, but still those standing facilities are available. So the excess unit, if they
so
want
you
to
do
come and park,
with each counterparty bank?
Yeah, they have that option. The standing deposit facility and standing lending facility are open to them. So if they want to park money, they can come and deposit. If they want to borrow, they can borrow at the lending rates.
So does it mean that you are trying to fix the rate?
I think, let me clarify this, why we move into this thing. Earlier when we had this ban, usually within the ban, but our control framework is basically more effective when we target daily weighted average call money rate is the target rate as already mentioned. So for us to target it properly, that's why reason we moved to single policy rate in line with our owner's policy rate. So what happened in the past when we have a band, this band is 1% before we move into single rate. When we have band of 1%, daily basis this call rate is varying between not exactly the middle, some days responding with excess liquidity, short-term liquidity, moving 10 basis up, down, likewise volatility within the couple of days was high. So that basically confuses the market of our monetary stance, because for example, one day coal mine rate goes up, market can read the signal the central bank is basically moving towards a tightening. But it's not. It's mainly because of the liquidity situation, market can move up and down because of the corridor. But to make it clear, we want to target the short-term call rate, clearly moving, that's the target rate. That should be easier when you have a policy rate and the Coleman rate moving in line with our rate. So then it's easier for us to manage this. Basically, whether we need to have market operation or not, depending on our ability to maintain weighted average call rate closer to the policy rate. That's a very clear signal we are maintaining this rate. If there's any change in the policy, we reduce or increase the policy rate, so that is a signal. Otherwise, in between variation of Coleman rate up and down, that gives a confusing signal to the market. We are purposely, letting it go up or letting it go down. That can be a confusing signal. This is much clearer signaling to the market, and also it's easier for us to maintain rate closer to the target rate. That's the whole idea. So as a result, some days we don't need to say, for example, daily call rate, market also have taken it very positively. They basically transaction very close to the policy rate as a result of our signaling, or clear signaling that this is the policy rate, market is trading around. So that's a good, better interest rate transition to the market. Otherwise, you say call rate moving, say 20 basis point up, 40 basis down within a day, it can have impact on the primary auctions or T-bill rates, shorter term rates or repo rates. That bit of a volatility is not good for monetary policy implementation. That's the reason.
I'll ask you a question, layman's question. Suppose the banks have excess liquidity. Suppose the banks can't lend, they have money. Right? So then what happens?
So then that's a facility we have. The bank is up to the bank. If they are to lend, if they can lend in the market, in the interbank call market, they can lend at closer to our policy rate. But for some reasons, some foreign banks are not willing to lend to other counterparty banks, then their option is at a cost. Say 8% is that they can park money at 7.5%. They are losing 0.5% because of their choice. Otherwise, any bank with excess liquidity can come to the market and lend to another bank at this middle rate. That option is always there. But if they are not willing, then they have to park that money, and then they get a lower yield on overnight basis.
So does every bank have to be square by the end of the day?
They do. Basically, if they say liquidity, if there's a surplus of 100 billion, if 100 billion, 75 billion is with the foreign bank, they are not basically lending in the market, they park it here. So then there will be, some banks need that deficit to be financed within the market. So there are two options. One is balance 25 billion they can borrow from the market, or else they have to come to the lending facility, which is little higher. And then they have to pay additional premium for them not being able to come to the market at this rate.
I read a very interesting half a page article by the central bank yesterday on liquidity and quote unquote money printing. Why did you have to do that, and what do you expect to sort of achieve from that explanation?
These are, I think, what we are trying to communicate operations for beyond the marketplace, for them to be able to understand our operations. We are trying to communicate in a simple language for public consumption, how we do it, and otherwise there are a lot of misperception, misleading ideas being circulated in the media, looking at the day-to-day liquid surplus or deficit. All these things basically confuses people who wouldn't have good understanding. This is a part of the communication. We have a series of articles, op-eds on our operations, so just to make awareness of the operation. This is a bit complicated, but I think that's the whole idea.
Since the communications director is also here, I read through it. I understood it, but I doubt very many people understood that complicated technical jargon. So since the director communications is here also, and I asked what your objective is, I think you should sort of bring down the technicality next time that you try to explain this to the regular layman.
Certain things we can explain with. That's why if you look at some of the communication, labor language, so over deflation, inflation, we have some comics, some of the social media posts are being published. But this is a little bit more technical, this thing, difficult to make it very simple unless we explain the whole thing, but no one is interested to read those long articles.
Governor, small clarification on the single policy rate. Some of the overseas banks who may not be willing to give it out there will come and park it obviously at a hit. They'll take a hit out of that one. And then a local bank who want to then access to that money from the central bank, when they are getting it, they will get, I suppose, not at a much higher premium than that they would get it out from the market. So as a result, the overall cost will go down. There will be a net benefit to the market as well.
No, that's why, for example, some days we, for example, even though there's a early example 100 billion the surplus, if foreign banks are parking 75 billion, then 25 there's a deficit of 75 billion. If you think there are other banks wanting to borrow in the market, then that's where we conduct open market operations, and we conduct operation and then let them bid in the auction, and that's where we auction rates should be closer to this rate. So they basically, we don't want all the banks to have higher borrowing costs as a result of others are not lending. That's why we intervene and provide them liquidity on the daily basis, overnight basis.
Now this settlement of surpluses and all go through the RTGS?
All the settlements are basically going through the RTGS system.
That's the settlement process.
Yeah.
And on the RTGS, what is the total value for a year?
Yes, I don't know the
Trillions.
settlement.
Nearly 1 trillion transactions, so around
No, I'm talking the value.
Yeah, the value, that is the value I am telling. For a day, for a particular day, it is nearly it is little above 1 trillion.
A day?
For a day, yes.
So you're talking of about 360 trillion
Yes,
for a year?
closer to that, not that much.
Is this the same as the financial banking transaction value, or that's different?
No, it is totally different, because for the RTGS system, all are high value transactions which are coming through. In the banking system, it is much lower than that.
What is that value like?
So, say for a year, for the last year 2024, there were 202 million transactions in the market, and the value is 17 trillion.
17 trillion?
Trillion, yes.
A year?
Yeah.
And 17 trillion is what? I didn't quite catch.
It's bank to bank, what they say is small value transactions, retail transactions.
I have one question. So these basis points we have been reducing since 2024 continuously. Do we check another variable as a result? What with this, do we have like few other variables that we want to achieve? In the sense that like the credit availability or consumption, or is there anything other indicator that we monitor alongside this?
We monitor a lot of variables, but basically when we reduce policy rate, it is mainly with the objective of reaching the inflation target or a medium to long term. That 5% target is the target which is in the mind. Looking at that, we see whether we need to reduce or increase to meet that target.
Do you see that happening?
Yeah, of course. That's when we start reducing the rates, inflation is now getting
through
back.
consumption, is it?
Not necessarily. I think inflation can happen in various ways. I think that's why the breach is sometimes whether administrative price changes can also bring down the inflation, like the tariff reduction. Sometimes high demand for local demand, industrial consumption can also push the inflation up or demand up. Then this exchange rate pass-through can also have an impact on the inflation. So we are taking through consideration all the channels of how inflation can be impacted. Then we take into consideration credit growth is one thing that I also explained. Credit growth is moving higher than what you think. It could create some additional demand, and that could create inflation in the future. So those all factors are being money expansion, credit growth, broad money expansion, exchange rate, current account deficit, the the reserve positions. All are important variables, and also forward-looking indicators like the purchasing power manager index, business outlook, business sentiments. So for us, we have understanding of what will happen in the next.
Yeah, so basically this is the trigger now that you have. So when you pull it down or up, you just monitor rest of the things, how they are moving as well. The
of course, yeah.
I'm sure you must be doing some regression analysis on credit growth to see what kind of the transmission mechanism is and what the lags are and so on. Because I recall last time we were talking about the transmission lag. Have you got any better ideas now? The minister's question is quite relevant from his perspective also, I think. From the industry's point of view, when are they going to see lower interest rates so that credit growth can happen?
Credit growth is already happening more than what we expected. So if you look at last 12 to 18 months credit growth, I think even now what we expected with this monetary policy path, I think credit has been growing much faster than what we thought, and partly because of this government fiscal consolidation also helps. Basically, government and state public enterprises are not borrowing as much as they have been borrowing earlier because of the cost recovery pricing as well as government fiscal discipline. As a result, there is some space for the private sector credit to grow, that is growing. So that's in line with our expectations. If we think that is too much of this, then we have to, that will reflect either on the demand side or in the balance of payment pressures in the exchange rate. So that's why we are monitoring all these pressures. If that's going to create excessive demand or unsustainable situation.
So I think it's clear, it's reflective. I think the question specifically was, do we know the lag, like when you change now this May that we do this impact will come in September, or is there like a trend analysis?
Yeah, that's usually in our research that we have been doing, usually what we expect. Today monetary policy action will have full impact transmitted in 12 to 18 months. It's not immediately. So that's why we're looking at the inflation forecast coming back to 5% say next year. If that is going to, in the target, that's we have a space. If you see 12 to 18 months period, inflation going to go higher, then we have to tighten the monetary policy.
What's the credit growth per year at the moment?
So last year we had around 800 billion, and this year we are expecting
800
billion.
Yes.
Billion.
Percentage terms?
Percentage term, it's 10 plus.
A private credit or?
Private credit.
And total credit? Total credit? That is government and private?
Domestic credit.
Somebody can look for it. You can go ahead.
Okay.
Somebody in the team can look for it.
Yeah.
Broad one is a broad money is moving around again 10 to 11%. No? Yeah. It's in line with the broad private sector credit.
So actually we have seen a decline in net credit to the government and to the SOEs.
Now it is prohibited from borrowing? No? Within those
but this covers the commercial banks as well. This is a banking system, not only central bank,
NCG.
it's a banking system. Yeah, NCG.
Under the new Act, Governor, the central bank doesn't act, there is no thing of lend of last resort.
Last resort is a different thing. That is for financial system stability. If banks have a liquidity issue,
One of the main roles that the central bank played then was protective role of a lender of last resort. But now that's out of the system.
No, they still will have.
But only for the banks.
But then that guarantee comes not from from the government, no?
No, from the central bank. Lender of last resort is basically if they are saying financial institution basically coming to a liquidity problem, then we can inject liquidity, provide liquidity to the banks, or usually mainly to the banks. That facility is still available.
Central bank can?
Central bank can, yeah. That's short-term liquidity. That we can provide. That is one of the major functions of the central bank to provide lender of last resort is a key function of the central bank. In the central bank, not only us. Is provided under
the new one, under what section?
All that, even new one, that facility is there.
Same thing remains.
Yeah.
But only for the government. That was withdrawn except for emergency
that's
situation.
That's basically direct monetary financing.
Correct, yeah.
Of the.
On a housekeeping matter, did you all get tea? All right. I feel bad we are having tea.
Sorry, that gentleman mentioned when you said that the total financial transactions is 17 trillion, you said that's small transactions, correct?
Retail payments.
So what's the, when you say the big transactions, how do they get communicated? Is that not part of the financial transaction?
No, those are the reporting of transactions are different. So we normally publish a bulletin called Payments Bulletin quarterly. In that bulletin, we publish all these transactions, the large value transactions from RTGS separately and retail transactions separately.
Sorry, I have one question. So now these rates are coming down continuously. Do we have again a look at the lending rates of the banks? Have they come down, or what? Now the spread is still very high, right?
So
we have it in there.
Okay. Yeah, it's the next slide.
Okay, right.
No, it was this slide. This slide.
Yeah, that's what I'm saying. So the FD rates are here. So that's
the lending rate is also here.
Yeah, but when you really go to borrow from a bank, they offer very clearly. They say we will offer you now 5% because the rates have come down. But when you want to borrow for something, it starts at 14%.
But here, no, average weighted net lending rate is 10.54 as said currently.
The weighted average rate, weighted by loans.
All weighted.
Yeah, all loans. All loans.
So there's about a 4% spread.
Depending on, maybe a personal loan must be at 14%, but altogether the full volume.
No, the minister is asking between the DR and the LR.
Yeah, the 10%.
6.24 versus 10.54.
So net interest margin, latest numbers is 4%, 4.1%. Compared to historically, it has been around 3.5. Recently, last year, second half and this year is gradually increasing, mainly because this when we are reducing interest rates, basically transmission happens first to deposit rates are adjusted immediately, lending rates are adjusting gradually. So that still the adjustment is taking place in terms of the net interest margin of the banks.
Interestingly, Governor, we had the finance ministry here 2 days ago and they were showing us massive numbers on financial VAT. You think that has any relevance to the spread?
Yeah, that also, when you look at the banks' profits, more than 50% is basically coming back to the tertiary as tax. Financial VAT or this thing, basically that part of this thing is factored in the interest margin. So that's usually.
So after ultimately it's going to the consumer in some way or the other.
Yes, taxpayers' money can again be spent.
Just a clarification, Governor, relating to the matter that Honorable Minister asked here. 1054 is could be the average. What could be the upper end? This is the average value. Do we have some reading on that one?
Yeah. Do you have numbers?
10.54 lending rate is the average, factoring large entities with risk levels are different. What will be the kind of higher end on that one on this?
No, there are depending on the different products. For example, now the credit card rates are those are not lending. This a credit card is a short-term facility. So you take that out, you have one is a maturity. So longer-term loans have higher rates. Then prime customers usually rate is now 8.4, but the non-prime customers add some premium. So there are rates for normal lending people, MSME, SME. Depending on the risk factor, banks have a different risk premium. So it varies from one is the product, other one is the customer risk premium. So there's a range. For example, I think as mentioned earlier, there are some rates, personal loans 14%, owning advances 11-12%, and the shorter term loans are lower rates, longer term loans are higher rates, and government securities basically are completely with market, close to market.
These very same categories that you mentioned, Governor, by any chance we can have some information. So this is the 1054. Above that, let's say if it is government securities at a different rate and the personal loan, then the SME sector, then higher risk premium ones likewise, different grades. So we can see kind of the average for each of those items. This is once you put everything together is the 1054, but you unbundle it, this will be 1054, some may be lower than that.
Yeah, I think we publish all this information, it's available in the public information.
Thank you.
Yeah, that's fine.
It's in your
Thank you,
weekly, it's in your weekly report.
No, Governor, just
Thank
for knowledge, is this spread of 4%, 5% is normal in other countries, or is it high in our country?
Honorable Chairman, I think this debate on the spread here has been going on for a long time. Answering the Honorable Member's question, 4% is considered high, generally speaking, compared with some other countries. But there are some reasons for that which also we need to take into account. Now, one reason is in Sri Lanka, the main source of income for a bank is through this interest margin. Compared with some of the other countries where there are fee incomes, trading incomes, the opportunities for that are relatively low in those countries. So the composition of their income, if you look at it, 70% or sometimes even more than that comes from this interest margin. And the other big issue which is often hidden, we are probably the only country in the world now which has the financial services VAT. Now usually VAT is borne by the consumer. It is a pass. But in the case of banks, it is embedded in what you charge, because so obviously that 18% VAT is also in that spread, because you have to pay on your profit plus then you add on various other things. So when you compare, you have to be a bit careful. You can't compare it directly. You need to make those adjustments. So when you do those adjustments, and the other thing is the credit quality. Now we are still emerging from quite a difficult credit situation where I think our stage 3 or non-performing loans, as you call it, it has come down from its highs, but still quite high. I mean, in Sri Lanka, and it has generally been quite high compared with our neighboring countries. I mean, for a variety of reasons, most of the time. So all that is also costing money. So when you look at all those things and when you normalize for those, you cannot conclude that that there is a difference. I mean, I had done this exercise, when I was on the other side of the central bank, because central bank always used to come and say that the spreads are too high. So we disaggregated all of these things. And it is not you cannot say that it is high, but of course, sometimes, as the governor mentioned, in the transition, there are time lags. So when the rates start going down, the lending rates do not come down fast enough, which is a fact. So that is an issue. And when rates go up, lending rates go up first before the deposit rates go up. So those transmission lags are there, but in a steady state, it would not be so much of an issue. So I think while there is some scope for reduction, especially, I have myself been saying that there are certain rates, I think, in the market which are too high, in my view. So something that we probably need to do, but the central bank wouldn't wish to go to individual items and try and regulate rates like that. So we are trying to get the total rate structure down. So that is the thing. So there is some scope, but I don't think there is much scope to reduce it a lot.
On the areas of margin, is there a distortion between the state banks and the private sector, where they are a little more leaner and this thing, and that gap brings the private sector advantage? Their costs are far less than it is. So is that part of...
It is a factor, because the private sector banks tend to be more leaner when it comes to and if you look at a foreign bank, then it is even more lean compared with the local bank. So those distortions do happen, but so the numbers that was mentioned was overall for the whole, covering all of them.
Move from 2 to 5. Now, when you say the lending to, when the minister asked the question, lending to prime companies and the others, it's AWPLR plus a figure that is given.
Well, there are some borrowers who can even get AWPLR minus, I believe. Legal loan plus. So that is a factor of the credit risk as perceived by the banks, and
so it's a purely banking perspective.
Yeah, it is because it is I mean, I think it is perhaps not, shall I say, it is difficult for the central bank to go and ask how the bank should price risk.
No, now on the monetary side, it is you all that are doing it. Now there I don't see any priority lendings of the central bank. Earlier there was direct.
No, we have not gone and do any directed lending.
Earlier there was the way that the government's policy could be created through youth or whether it is SMEs or something. But now that is not there.
Yeah,
so on that score, how do you basically resurrect certain areas which have gone through some unusually painful development? Now there is a battle on these SMEs.
So those have to be done on a one-off basis, on a case-by-case basis. You'll have to deal with those. I think which are getting done. I think. I mean, even as we speak, there are some discussions going on that.
As those sectors are quite relevant in the economy, which is roughly 60 to 65% of the economy. So you can't let things heal by itself. It will take that much of time.
So there are some.
So how do you? Because government's hands are tied, but now in the new aspect, it has to be led by something. So there is no priority lending at all.
Honourable Member, Mr. Fonseca, that is 6.3. Shall we? This is substantial.
Sorry,
matter
I have to leave for the business meeting.
Right.
So if you don't mind, then I can ask and then you can.
Sure.
So I just want a clarification because I feel that there needs to be an impetus that is given to stir business in this type of environment.
Well, one can argue that is actually a matter for the state. In the sense it is.
But the state can't do
What I mean is to providing through the fiscal certain amounts of support to these sectors or whatever it may be.
But the fiscal also on this first year, where the public fiscal management, you are constrained with 13% spend. So I mean, you are giving the government a harder task. So as the Secretary Finance doesn't get involved in the monetary board. So how does the government's policies get incorporated into the economy?
So government policy is incorporated, the mandate given by the government to the central bank through maintaining inflation and financial stability. That is the government policy mandate given to the central bank.
So that's the 5%.
5% inflation and maintaining financial system stability.
So that's
the
only leverage that is. Now, just we asked this question last time, Governor. The concept of 5%, you think is that, that is the government accepting your cost of goods will increase 100% every 12 years. If that is the acceptance of the government.
Yeah.
So on that score, you think is that something which is worthwhile, or is there a better way you can reduce? These are relatively technical things. So on that particular basis, all I could see is there's only one direction. You're only expecting an inducement that is there. So GDPs in real terms don't grow, in nominal value it grows. So on that score, do you see 5% too high? Do you think it's better to have a lower rate, or what are the ramifications?
No, I think we had a discussion even last time. What is the appropriate inflation for a country like us? Say advanced countries have 2 to 3% inflation target. Then you have to maintain a very tight monetary conditions to maintain that kind of target. Basically, mainly when you have a large volatility inflation, maintaining low interest rates 2% or 3% means you have to maintain a very tight monetary condition. That's not good for an economy like Sri Lanka. So basically, this 5% has coming out of a lot of research done before the number is determined, and compare our level of countries' development stage. For example, India is 4%. There are other countries 5%. Some are 6%. In the US, Europe, Australia is 2 or 3%. I don't think we are ready to have a low inflation. I mean, it's up to the government. Government decide, give us a mandate, you bring down inflation 2%. If you want, we can bring it down. Then we have to raise interest rates further to tighten the monetary conditions.
But Governor, you're basically, while accepting that, you're having a deflation that has been going on for 18, 19 months.
That's what we are going to explain. This report is that.
So over that passage, you also answer the minister saying gestation period is also 15 to 18 months. Yeah, so if by chance now you want to rectify that, it will take another 1.5 years. So I'm saying is government policy. The governments may have different policies, so they want to on one side curtail expenditure, increase activities, etc. So they're caught up in between. So I'm asking as to how you all can respond to that thinking process.
No, that's why I said our mandate is different. Sectoral developments, SME trade developments, tourism sector, industry sector, ports, there are different agencies to promote those exports. That's why central bank can't do everything. So basically we have been given a mandate. That's our responsibility. We try to deliver our mandate. Anything else beyond, if we confuse those things, that's a mistake we had in the past. Long time ago, that was the Central Bank Act was revised back in 2001. If you can remember earlier, there was a development objective. Like some central banks at the beginning, we had this development objective. That's where we had central bank was giving credit to the sectors, director credit. Those were there about say 3 decades ago. We are moving to a different kind of situation.
So you got my word. So development aspect is void at this moment.
Development aspect is responsibility of the state. So that's why the legislators are there to bring in whatever policies to meet that objective.
So credit is not considered a variable for development in new way of thinking.
Yeah, now is that with the central bank's independence in this aspect, is it matched with the Fiscal Responsibility Act, which constraints with the IMF thing 13% and all? You're basically putting a government into a straitjacket operation.
This is a larger debate.
No, that
but
fiscal.
At the end of the day, that's delivery. I mean, you have a patient successful operation, successful patient.
No, government has obviously choice to deviate from the fiscal targets. That's up to the legislature to do
but
that.
tell Governor, how is it now? You're basically having costs bought at 13%. Out of that capital expenditure, then your revenues, whatever it is collected, it has to be X amount. You can't go beyond that. So you can't use that revenue into expenditure. So how do you get things moving?
I think that discussion will have take place at different forum, Chairman. I don't think this is.
No, that is why. No, I wanted to.
No, but that's the relevance we are asking. No, we don't want it remote control. It's not a remote control operation. We want to see as to how this will percolate down into the economy.
Yeah, I mean, this is a broad discussion and a substantial one. That is what I wanted to shift it to after the presentation, but the honorable member had to go, so that is why I gave him that time. But I just want to make one point. I mean, you have two primary objectives, and in section 6.3, it very clearly says, without prejudice to the attainment of its objects, and subject to the provisions of this act, the central bank shall support the general economic policy framework of the government. So there is that link. So you're not completely mutually exclusive. There is a link, but that link is indirect and not direct as it used to be. That I think is the specific. Doctor, will you please?
Chairman, my suggestion for us to also now our focus is on this matter. This is a larger debate, important one, but let's focus on to this matter. Otherwise, we'll be putting them in an uncomfortable position, also the officials and all. So
no, I don't think it's uncomfortable. I think it's very good to have a healthy
It's the most relevant factor of it.
As the government, we are concerned of this much more. But the concern is we need to manage time. Team members would have prepared and come for a particular discussion. Otherwise, we won't be able to focus on this discussion if we deviate too much. If this is an important discussion, let's agree among the committee members. With the concurrence of the committee members, we will call them for another discussion
Minister,
also.
The Honourable Minister,
my request.
Yeah, Honourable Minister, the Honourable MP said that he had to leave, and that is why he requested for time.
Business meeting.
Right, he has a business meeting.
No, but end of the day, I mean, we know 90% of what's going on, we know, but these are the areas which are the ones that are volatile.
That's
so I guess
fun.
getting answer to this is far better than listening to a tuition lesson. So, I mean, let's get moving as to SMEs, there are issues, investors are wondering, returns are there, pending aspect is reduced.
Agree among members.
Sure.
The chairman to call for a...
No,
Governor, is there any way that we could look at you all recommending priority lendings to the youth, the agriculture? Is there any way that you could say X amount? And what are the drawbacks if you do so?
Yeah, so let's, shall we sort of...
take that.
We'll take it, make a note of that. We can, if we have time, we can get into this.
Or what you could do is send that as your written this into...
Yeah, no, I think it's good to have a discussion. It's because this is a fundamental point, no, that new Central Bank Act was brought specifically to remove the central bank from intervening, playing a role in the development process. Money cannot, in my view, create growth. Monetary policy cannot create growth. Monetary policy, in my view, can stabilize the economy in the short term, but there has to be real growth that has to come from reform. So this is a ideological debate which you and I may not necessarily agree. So therefore, we don't need to get into that now. But we can have 3-4 hour discussion, because I think that's what is important. Like the honourable member said. So
Yeah,
I'm willing willing to have a broad debate. We can have the treasury, we can have the central bank, we can have the ministers, and we can have an intellectual
have
discussion.
that as a country.
We can do that. I'm ready to do that.
Chairman,
We can make a note of
the
that.
main thing is now the exchange rate is very volatile. Where the exporters are looked at that when you have domestic inflation going up. Then the balance of payments. All these are outside the aspect of government. So I am only looking at your problem and asking that, because I can see those are the relevant issues. I mean, those are what percolates down the people. So just keep that in mind. If you can, as time is limited thing, you all send that in writing to the.
We'll schedule a 4-hour discussion. I mean, we'll have enough time. I mean, this is an important matter. Yeah.
We will see the results by end of this year.
Yeah, we will do that. We'll have a half-a-day seminar. Fine. Let's do that. But Dr. Sujita, please.
Yeah. As Governor explained, this monetary policy, when we do a monetary policy decision, that is passed on to the final objectives of meeting the inflation target. So that takes around 12 to 18 months, but the transmission happens through the interest rates mainly. So the immediate transmission happens to the market interest rate, particularly the short-term market interest rates will get adjusted when we do a change in the interest rate. And later that will have an impact on the bank lending as well as the deposit rates. So we have shown the chart as well as the table to show how an 8% change that we have done from mid of 2023 up to now has translated into changes in other market interest rate. You can see that the AWCMR, which is the operational target of the current policy regime, has changed in line with the policy rate adjustment, more or less same as around 8%. But we could see that has brought in more transmission to other interest rate, because at the time of the crisis, the other market interest rates were much above the policy interest rate. So that with this policy easing, we could see that most of the rates have adjusted substantially compared to the peak that we observed in 2022. For example, if I can quote the 91-day treasury bill rate, we could see that it has declined by more than 23% compared to the peak in 2023. So that translated into lower interest cost to the government. Similarly, if I can talk about the lending rate, average weighted lending rate, which is applicable to the private sector, that declined from for 8% change in the policy interest rate, we could see that has declined by more than 15%. And a similar adjustment has happened in the deposit rates and the 1-year T-bill rate and the prime lending rate. So this shows that for the monetary policy easing that we have done so far, we have seen that market interest rates have adjusted fully. So we can say that there has been a complete pass-through to the interest rates. And since the external sector discussion was also there, we would like to discuss a bit about the external sector development as well. We have observed that the current account surplus has improved, and during the first 4 months, we have recorded 1.1 billion current account surplus. We started publishing monthly current account starting from January, and the projection suggests that this year also we will be recording a current account surplus, 3 consecutive years of current account surplus. This is the first time in the Sri Lanka's history. And earlier, so there were arguments like that could be because of vehicle import were not allowed, but even with the vehicle import, we expect that there is a possibility of recording a surplus this year as well.
So current account, what is the sum of?
So that will be a sum of the trade balances, imports and exports. There we have a deficit, and then we have
Is that deficit growing?
That is growing. that was expected when we relax these import restrictions and we see economic recovery happening. So there is a demand coming from consumption, intermediate and investment goods. So imports are picking up. Export is also growing, but at a lower rate. So we see trade balance is widening. But the primary account is the next, primary income account is the next category that shows our interest related payments. That has relatively come down after this debt restructuring. So we see a manageable primary income deficit. So in these two accounts we have deficit. Then we have the services sector surplus that generates surplus. The main surplus is coming from tourism. And also there are other services sector. So from other services sector also we are generating a surplus. So altogether services sector account is generating a surplus. And the next part is the secondary income that mainly covers the remittances, and we see a notable surplus in that category. So because of services sector surplus plus the remittances, we see current account becoming surplus.
Why don't you think your point number 2 on interest, now we pay very little now? So that also may be playing a significant role in your outcome.
It's not actually a major difference, because even earlier, even though we were in the debt standstill period, it's on an accrual basis. We have been recording what was due for that period. And compared to, so we were talking about around 2.8 billion those days, and this has come down to around 2.3 billion now. Going forward also with this debt restructuring, we expect it will be at a manageable level. Less than 3 billion deficit will be there for the upcoming years also. That will be manageable through workers' remittances and the services sector inflows.
There's a slight drop in the reserves in April. Can you explain why there is a drop?
So the reserve is actually calculated. So there are two major components coming in the gross official reserves. One is the reserves held by the central bank, and the other component is called DST balance, that is the government portion of foreign reserves held at the central bank, DST balance. So these two components are the major components of the reserves.
How
so
much? Sorry, go ahead.
There will be inflows to those two reserves and also outflows. So inflows, when we receive new loans, we get inflows. And for outflows it will be, and also when we buy from the market, domestic forex market, when central bank buys, that becomes a inflow, so our reserves will increase. There will be outflows, so mainly in terms of debt servicing. And so the monthly changes in gross official reserves will reflect the changes in the inflows and outflows.
What specific outflow are we seeing here? Is it debt servicing?
Debt servicing mainly, yeah. We bought also. In April, central bank bought also. On top of that, there were some debt servicing payments to the government also.
Sorry, please go ahead.
When you buy from the market, it has indicated 900 million on net basis.
Yeah.
So you make use of the dollars that are the forex that are available there, based on the remittances that we receive, exports,
and the export proceed
and FDI also, what we have got into the country.
Possible if those
so
those come to the
the
market.
central bank will have visibility of the FDI that is coming into the country.
Not directly. We actually get data from BOI for FDI. When we are recording FDI in BOP, we get it from BOI. These are like daily inflows and outflows. So whatever that the banks are having excess will be served for demand for forex from the market, as well as maybe our purchases. So if we have a net inflow in a day, we will be buying. So that will be added to the gross official reserves.
So you will have, you will not know the exact details of how much came in for FDI into
That
the country
will
from
not
the central
be there.
bank side.
Yeah. So workers' remittances and export proceeds, it's easy for us to get daily reports, but FDIs, I don't think we have a separate category to.
What about the outflows of remittances? Is that also not recorded?
Everything is recorded in the balance of payment on a quarterly basis, not on a daily basis.
Reflected in here?
Yeah, yeah.
But that information you don't kind of keep a track. There's no tagging or something that we can, you all can identify those information, remittances like I know you all have the details in terms of remittances.
Yeah.
Similarly, FDI that is coming into the country.
So FDI.
If I may clarify, we
Yes,
have
please,
this
Governor.
monitoring system called International Transaction Reporting System that we developed recently, where banks are reporting to us online based on the codes. We have given them, okay, this transaction they have classified, this is portfolio investment, whether it's FDI, whether it's import, export, there's categories there. But this usually FDI, difficult to trace this inflow when it comes in, because depending on, because banks usually, for example, the BUI company bring that money in, for example, they report to the bank, this is inflow to this company. It could be in the form of imports, expenditure for this BUI company. So it comes as the imports. Then corresponding entry, we will get that information only from the BUI. Then BUI reports to us, this BUI company, how much they have brought in as foreign direct investment, out of which what is import, what used for imports, what used for domestic investment. On that basis only we classify on quarterly basis in our balance of payment compilation. That is where the more detailed information. But daily basis is difficult to monitor this kind of transaction. Only exports, imports, remittances are easier because the regular banks can easily identify. Other transaction, it has to come from the source of the company.
Governor, is it correct to understand? So going forward, based on this tagging system, on a quarterly basis, central bank will have visibility as to how much of FDI coming in?
Yes, even now we publish quarterly balance of payment, which gives all the lines.
Okay.
Details of inflows, outflows.
Why I ask, otherwise we have to ask, rather rely on BOI to provide that information. But if it's available and if central bank is publishing that one, how much of FDI that has come into the country, then there's no necessity for us to get that from BOI.
This thing is that we have to rely on BOI. One of the problem there is, Honorable Minister, so the primary source of information is Board of Investment.
Fair enough.
They have a primary source. Basically, we rely on BOI, but they have to give us information on breakdown of, basically BOI definition includes even what they have, the retained earnings. Also considered as a reinvested here, there's no cross-border transaction there. Even we company take a loan, if that comes in, that's also part of that. So basically that's where the BUI FDI inflow includes reinvested earnings, borrowings and direct investment, the three categories. So BUI has information from each and every company, what was retained earnings, what was the net FDI inflow and what was the borrowing component or from the parent company. That information we don't get that. We have to rely on BUI, otherwise it's not right for us to challenge the primary source of information.
This is the function related to the financial intelligence unit. The core functions related to AML CFT measures. The FIU unit of the central bank has continuously involved in the intelligence analysis as well as risk-based AML CFT supervision. And also there has been international cooperations related to the upcoming the mutual evaluation next year. There has been high-level delegations from Asia Pacific group of money laundering during March to provide critical insights to support the upcoming mutual evaluation.
There are two questions that arise. One is, what's happening with the investigation on the vehicle, the thing that we were looking at, remittance, the foreign remittances linked vehicle import scheme. There was a report jointly undertaken by the central bank's financial investigation unit, the customs, the treasury and the Ministry of Foreign Employment. There was some startling findings. Are there any updates on that?
Honorable Chairman, with regard to investigations, all matters that is reported to the FIU gets analyzed, and those, as we earlier also informed Honorable Chairman in the previous committee, this matter had been referred to the Criminal Investigation Department for further investigations.
Okay.
And as far as the FIU's purview is concerned, we have also provided further information to support such investigation.
Is that happening?
The outcome, of course, is with the Criminal Investigation Department, which we are not privy to query with regard to the status of the investigation.
Thank you very much.
Thank you.
Make a note of that. We just check with them. The second point is now the casino. Finally the regulation is coming, and the internationally renowned casino is to set up operations, I think in August. Have you all gone through the regulatory framework? Are you satisfied with the conditions that have been agreed upon in terms of AFL, AML, CFT?
Yes, Honorable Chairman, actually we were one of the key parties who supported the bill, which is, I believe, being sent to the Parliament as we speak, to be listed in the order paper after, I believe, the committee stage submissions. At 3 stages, we have provided necessary provisions to be tweaked and improved respectively on the bill, and we have also received a draft of the earlier version, not what is before the Parliament, I suppose. And to that also we provided detailed improvements, and those have been taken in. And apart from that, on your first question with regard to the group which have come in right now and will be in operation from August, we have had discussions from the FIU's point of view. We've had discussions with them one-on-one, and we have been assured that all AML CFT regulatory measures will be put in place, and these will be at the internationally accepted level and also fulfilling all the Financial Action Task Force recommendations.
Now, something we've heard is, look, these people buy these junkets or whatever, and it is paid for in another country and settled also in that same country. Because you can't carry cash if you win it in a casino locally. I mean, currently we have 2 or 3 casinos that are operating. But given the fact you earlier said that there has been not a single person regulated or is being regulated under the Hawala law, how is this going to all work out? Because we know that they actually don't bring the money and take the money back. It's so how, and also for tax purposes. Now, how do we know how much is being played, what the winnings are? I mean, are you all going to have some sort of oversight on these casinos, or the big casino that is coming, the casinos that are already operating?
I can answer you on the first point of question, not on the second point on the inland revenue mechanism. On the first point, basically the Gambling Regulatory Authority bill has sufficient teeth to issue directions and regulations in order to capture junket operators as well, and to have some sort of a mechanism to identify the proceeds which are being taken out or being brought in. And this has to be, of course, coupled with foreign exchange stringent measures, and of course customs will also have to be involved in these discussions. With regard to the second point, the inland revenue mechanism, it's already the casinos are under the revenue collection structures, and of course going forward whether the junket operators will be included in that revenue mechanism is yet to be seen. But of course, through the Gambling Regulatory Authority bill, once the once the regulatory authority is established, it is very much within their purview to issue regulations and necessary directives.
I mean, are you telling us that you are fully satisfied that the junket operators and others, who bring money in and take money out will be monitored? Are you satisfied with the regulations?
At the moment, I would not use the word satisfied, because at the moment it's a point-to-point based value transmission mechanism which we are not seeing. As you mentioned earlier, junket operators may be settling from their respective counterparts in their respective jurisdictions. and that, but there is definitely value coming to Sri Lanka. And otherwise the modus operandi won't be of benefit to the casinos, in the local casinos. But what is happening is that once the Gambling Regulatory Authority comes, that might, there is also a way to monitor this operation. At the moment, there is no mechanism to monitor. The only mechanism that established is within the Fiscal Policy Department of the Ministry of Finance. That's also for licensing purposes, because there is no provision to enforce it even under the current Casino Regulatory Regulations Bill, Act of 2010.
Yeah, so all what we want to make sure, because this committee was really the driving force in getting this regulator legislated, is that the central bank is fully aware of what's happening, so that we won't get into another issue with a grey list and all that. You know, we've gone through that previously, so we're just making sure that you become comfortable and confident and satisfied with the regulations, because no regulations, I think, are being listed yet. It's just the act. So once the act is done, the regulations will have to come. But already it is June. So
fully agreed, Mr. Chairman. Honorable Chairman, only thing is that once the bill, of course, gets through it will be the full responsibility of the Department of Fiscal Policy and the Ministry of Finance. Apart from that, there's one concern that we have also raised with regard to the Colombo port city, and also with regard to cruise ships that comes to Sri Lanka. This is also highlighted during the previous mock evaluation. The fact that when the cruise ships arrive in Sri Lanka, whether they have casinos, if they have casinos, that should be prevented from operating within the territorial limits of the water, Sri Lanka. Otherwise, the local casinos will not have a necessity to operate. So that's one of the other areas which is right now challenging. And we hope to tackle that, because that's one of the key AML CFT loopholes that we have observed in the moment.
But that means you're trying to influence, a luxury cruise coming here. If they're playing gambling, you're telling them not to come.
No. Actually, this is the international practice. Whenever a cruise ship enters within the territorial limits of water,
rather than stop them?
Answering the earlier question, Honourable Member, within the territorial limit, which is 12 nautical miles of Sri Lankan waters, no single cruise ship should be operating their respective casinos. And that had been the international requirement. But Sri Lanka has no, because obviously for reasons that we didn't have any regulatory authority, we are not in a position to impose it. But of course, we are having discussions with the Port City Commission as well as with the Harbour Master to see what current situation is. And that's also something to be taken consideration under the...
Chairman, I just want 2 matters. One on acceptance of Ruble, because the Russian ambassador just a week ago had mentioned more tourists can come if we can go into their problems. The Ruble, anything that we can push things to try to utilize the rubles here? Is there a way? Because we are buying Russian fertilizer. I was told that there was other Russian things that are going on. So can't we utilize the rubles and ensure that we have a more Russian tourism coming in? Because the southern belt relies on that in a very big way.
Honourable Member, with respect to Russian rubles, due to the sanctions posed by the United States, it is not possible to transact with Russia at the moment.
No, they have not sanctioned. No, today the Trump and Putin are best of buddies, so there is no sanction on rubles as yet.
But in the financial industry, it is still there.
No, but that's a perception. You all have no. As of today, rubles is a tradable currency even today in central bank. Acceptance is what you all dictate. But the problem that is there, the Russians who can get, he's saying 500,000-600,000 more tourists. So that's a low-hanging fruit. If we buy Russian fertilizer.
Yeah, Honourable Member, and if I can give some clarification on this, it's actually, although those two persons may be best of friends, still the United States Department of basically the United States Treasury has issued what is known as US Office of Foreign Asset Control designated list of entities and individuals. Under that, most of those entities which are involved in commerce in Russia are designated entities or individuals. And it's still the case. And therefore, impact is where if any commercial enterprise, including a bank, enters into any custodian relationship, if they are dealing with one of the sanctioned entities or individuals, they will lose the privilege of entering into or transacting with United States dollars, and that will be a killer for all these banks which carry out custodian relationship. It's under the Patriot Act as well as the US OFAC list.
Well, I would like you all to look into and give suggestions to the government as to how we can utilize that offer that comes in, because tourism is a dear subject that I think for the country at the moment. And the other one, Chairman, I would like to ask is, who is the responsible entity for building up the dollars in the reserves of the country? Is it now entrusted in the central bank, or who has got to do it?
Central bank.
Central bank. And your process of that is that you all basically on your transactions that you all do as profits, which you all have made 275 billion last year, say, is what you all utilize to develop reserves in the country.
No, this is about what you asked. This is foreign exchange reserves. Yeah, of course, foreign exchange reserves. Central bank has the responsibility to maintain official foreign exchange reserves. That includes central bank foreign exchange reserves as well as government balances in the accounts with the central bank. There are two components, as already explained earlier in the presentation. So what we build up reserves through purchasing dollars that is coming into the government as loan proceeds, like IMF, World Bank, and as well as our intervention in the market to buy dollars that we build up reserves.
So that's done by the profits that you make?
No, profits is
not.
No, profits has nothing. Profits are different thing. That's our balance sheet in our both domestic foreign operation that we generate profits. So it's a different thing. But for us to buy dollars, we can create profits. So we give banks rupees and we buy dollars.
So the business climate of bringing in the dollars is the fiscal and the government policy?
No, that's...
Profit is what flows thereafter.
No,
how do you all penetrate into the market to create that reserve? What is the mechanism?
Mechanism is through banking system. So banks are authorized dealers to do all the foreign exchange transactions. When they receive foreign exchange inflows, exports or remittances, that comes to the bank, commercial bank. Then there's a demand, they sell part of that. If there's a balance, they sell. If there are no buyers in the market, they sell it to foreign exchange, central bank. Then we buy that dollars and build our reserve position.
So roughly on this, to get to the $14 billion, you roughly have to do about 200 million intervention in dollar reserves to be built up for that 14 billion to be done by 28, to achieve that in 28.
If that is a target, we have to build every year. For example, this year target is to build up to 7.3 billion reserves. The next year about 9 billion. Likewise, we have a gradual build up over a period of time through foreign exchange earnings coming into the country or foreign exchange proceeds, international loans that we buy and build up our position.
So if there's a catastrophic situation, how do central bank step in to build up the reserves?
And that's why you need to build up reserves to be used at that kind of a shock. Then we release that foreign exchange to manage the exchange rate.
Government policy will have an impact on reserves?
Mainly the government policy in terms of, there are several ways. One is government policy on borrowing by the government from foreign sources has obviously has an impact on the resource in terms of building resource. And at the same time, when the debt service will have to go out, again that tax is going up. In addition, government policy on promoting exports, the services, that will bring more foreign exchange into the country. So we will have opportunity to buy that foreign exchange to build our resources.
When does the central bank reserve profits that you all make get converted to the government's revenue source?
There's in the Act, this clearly says, after this financial statement presentation has all these details. If we make profits, there are certain provisions to build up our capital have certain retained earnings and put aside, for example, mark-to-market gains or losses and foreign exchange valuation gains, they have put it up, and any balance will have to be basically distributed to the government as dividends. The balance.
When you did the domestic debt restructuring, the 700 billion loss that was taken was in this process.
Yeah, that was a loss in 2023.
So that loss was taken from the attributed profits that you made.
Yeah, but there's no distribution of profits because we made a loss.
Yeah, so
Yeah.
it's you are setting off your losses against the intended profit you
Yeah,
made.
yeah.
So
Once you
that
build up-
crystallizes into government revenue at what time? Is there a provision in that that says after such and such, after
Yeah.
fulfill requirement? What is
Then we
that?
have to distribute the balance will have to be distributed to the government.
So what is it that you have got to retain to give it back to the government?
Sorry?
What is it that you have got to retain at your bare minimum?
Yeah.
Beyond that becomes government revenue.
Of course, yeah. There's a limit that we can retain. There are. Yeah. Now basically, now we have a 700 billion loss now. We have to first basically fill that gap.
Now your 24 you have declared 275 billion profit, no?
We
That
made
means it's not, you have made 275 after you pay all your losses, no?
No.
It's
No,
not
no.
your carried forward.
Carry forward is still a negative.
Only 275 for last year.
Yeah.
So what's your carry forward loss at the moment?
This first 3 months, I think there's.
No, overall now.
Overall, because of the debt restructuring impact, we had 700 billion loss to the balance sheet, of which profit that we made 275 billion last year. So it's 300 something. Then there's still retained earnings is negative because of the earlier larger retained earnings negative. Now it has come down to a lower. Still it's negative. So that's why we can't distribute. Before the restructuring, there have been years negative and positive.
No, but in the
So I don't
future, retained earnings have to
Yeah, first the retained earnings have to be made positive, and then thereafter when there is but it's not the full profit that is distributable, because there are certain things which are not distributable, like these mark-to-market things and all. So this 275 million is anyway not, but it will go against your retained losses or brought forward losses. So after that, the surplus, if there is surplus, you can transfer.
At any given moment, can the government expect a return from central bank as dividends? Because that will be another revenue source.
If the central bank make additional over and above what needs to be balanced here, then we obviously we have to declare that dividends to the government.
Sinaraj.
No, so if the finance minister next year says that I expect central bank to give 1% of GDP as profit, does that become your mandate, or they can't impose like that?
So there's a in the law it specifies how to distribute profits. Sorry?
Central bank making
No,
profits.
India makes a huge amount. I'm just following, India has been following that.
No, India has 700 billion reserves of the US dollars. That's the main income.
That's the profit they make.
That's the profit made.
Nothing stops you all doing.
We have 6.5 billion reserves.
That is what I'm saying. If you all are doing the financial, nothing stops. You can think whether rubles or whether anything can come in, think of it.
No, central bank objective is not to make profits or losses. Our objective is to maintain financial stability and price stability. Out of that operation, we can make profits or losses. If we make profits, obviously we will distribute that to the government.
And the monetary board, the US dollar seems to be under a severe threat because of BRICS and because of petrodollars moving out. How do you foresee the future as the dollar? Is this going to be a weakening currency, or is it going to be BRICS are going to gain, or how do you all foresee your future? Because these are strategic thinking on areas, some are moving out.
No, there are different views on what will be the future of the dollar going forward. That's a kind of a study someone will have to, and obviously when we invest our resources, we look at what is the current forward-looking basis, the position in the US dollar, what are the best instruments for us to invest, what are the instruments that will give best returns for the central bank on that basis. But beyond that, say next 10 years, what will happen is anyone's guess. I think it's difficult.
So gold is playing a pivotal role, right? If I can see countries are shifting those, and that will have impact on exchange rates as well.
That we have seen recently, because of the global concern, always we see flight to safety, people are moving into gold, people are moving to crypto now, the virtual currencies. And sometimes people are moving to US dollar. That's what US dollar has been appreciating for last several years, because whenever there's uncertainty, people move into US dollar investments. But that recently we have not seen that. Now recently moving into more gold as a safety. So that's changing from time to time, depending on the global situation.
Your exchange rate, euro is appreciating, your pound is appreciating, but the dollar seems to be relatively stagnant. Is it a policy that is being adopted, or how do you see it?
Dollar movement is a global phenomena. Basically, what we are maintaining our rupee versus dollar rate based on market demand supply. And what with the rupee versus euro, rupee versus yen is a function of cross currency movements. So basically what we are seeing recently in global developments, US dollar, after this trade uncertainty, US dollar has been weakening compared to last 2 years of continuous appreciation of dollar against the major currency. Now it's gradually depreciating, and gold has been appreciating, and some of the virtual currencies have been appreciating. So those are global movements. So basically what we reference point for us is rupee versus dollar. Then other currencies are the outcome of dollar versus other cross currency movements.
Thank you. Sorry.
One other thing.
Yeah.
When this time the budget, it was meant to be the first time the Fiscal Responsibility Act is coming in, the government decided to finance their budget deficit of 2.2 trillion through 700 billion domestically and 1.7 billion foreign. What is your perception on foreign borrowing still? Isn't this a serious, with the exports becoming a rather sensitive area, it's becoming hard to go by, is foreign borrowing going to be a liability to the country? I mean, domestic borrowing is no issue. So why that 2.2 trillion, 70% is in foreign?
No, foreign borrowing, I think this is up to the government to decide whether in their total budget deficit, when you look at the, say, 5% deficit, how much can be borrowed from locally and how much should be borrowed from the externally. Is of one, there are several factors.
My question, Governor, is not that. My question is, the rupee borrowing doesn't have a foreign stock debt problem. But if you take dollars, the depreciating which is done by the central bank will have an impact on the treasury. Every 1 rupee has an impact of 40 billion on the budget. So that is the reason why it is discouraging foreign dollar borrowing is being mentioned to the government as a responsible central bank or not?
No, that's, I think whether government needs to borrow in foreign currency or local currency depends on what is the interest rate they are going to pay on the borrowings. For example, rupee borrowings.
How strong you keep the dollar is going to be in your hand.
No, I mean
other the debt stock will have that going as
debt stock in rupee terms is one thing. If you borrow in dollars, whatever the value of rupee, debt stock will remain in dollar terms. It won't change a single dollar. So
that's what I'm asking.
Yeah, basically, if you borrow in dollars, you should be able to buy dollars to pay back in dollars.
Yeah, but my
doesn't matter what a rupee value.
Exports having a problem. You're having Trump's problem. So if you encourage more dollar borrowing, the problem comes on the government to have more dollars in export. Why? But we are seeing it stagnant for the last, I mean, forget that 22 year. It's in 11, 12, 13, 14, that range. So that's the reason why have you not advised the government that these are cautious areas unless you export yourself. IMF is not allowing you to give incentives. So how are you going to create the new investments? These are strategic problems that are there.
Yeah, that's, I think government certainly, I'm sure government is taking into consideration all these factors when they decide on how to borrow, what to borrow, all these things.
The government also should be transparent in how much they're getting in FDI. because you all were all privy to this, we have one question remaining on the EPF. We told the governor we want to ask a question. Before we do that, for all the members to know, පාර්ලිමේන්තුවේ ඉදිරියට හෝ යම් කාර්ක සභාවක් ඉදිරියට හෝ පැමිණෙන ලෙස හෝ පාර්ලිමේන්තුවේ ඉදිරියේ හෝ කාර්ක සභාවක් ඉදිරියේ හෝ ලේඛන ඉදිරිපත් කරන ලෙස හෝ කෙරෙන යම් නියෝගයක් සභාපතිවරයා විසින් හෝ කතානායකවරයා විසින් නැතහොත් කාර්ක සභාවේ සභාපතිවරයා විසින් නිකුත් කරනු ලබන විධානයක් අනුව ලේකම්ගේ අස්සන යටතේ වූ සිතාසියක් මගින් පැමිණීමට හෝ ලේඛන ඉදිරිපත් කිරීමට හෝ නියමිත තැනැත්තා වෙත නිවේදනය කරනු ලැබිය යුතුය. So it is very clear that the chairman or the speaker has a prerogative to seek any document from any official in the government. It is not it doesn't have to be a decision of the committee. It doesn't say committee. It says the chairman. Chairman ge niyogyak anu. Hari? So that I want to clarify. We just got the Parliamentu Balatalaha Varaprasada, Parliament privileges. So the point that I was trying to make, honorable members, is that this is a question that is relevant. How much are we getting? We need to know. Right? So therefore, the government should be transparent. And if you ask a question, we should be able to get the answers. And we will get that answer. And we will proceed because that is the mandate of this oversight committee. Unfortunately, the gentleman who asked the question left early, but we got this now. The question, thank you, Dr. Sujita. It was a very informative presentation. We are very glad that you are the face of the central bank making these presentations. And the question to you, Governor, is on the EPF return. Now, what was the return on the EPF member balances for last year?
11% to 2024.
2020?
11%, 2023, 13%.
Isa, what was reported? Was it 11% or it was?
11%.
Yes, for 2023, we have already paid that 13%. So 11% decided for 2024 in balance. So once we get the concurrence from the minister in charge of finance, we will credit to the individual accounts. It was decided by the governing board to give 11% for 2024.
If that is 11%, I have no question. I thought it was less than 11%.
No, 11%.
No.
Right.
Haven't they pegged it to something also? That it has to be their minimum of that? What is that pegged?
Yeah, as per the Act, 2.5% is the minimum as per the EPF Act. However, during that DDO, domestic debt optimization process, the government agreed to give 9% until 2026, minimum 9%.
11% for 2024, 25 and 26, no?
No, 11% for 2024 based on the return that we obtained during the year 2024.
No, wasn't it 2024 and 25?
No.
Why not?
24. 24, 11%.
No, this is the document that was approved in Parliament, no?
Yeah.
Right. If you look at this page 28, where it says the return, it is stepped down. Sorry, that's right. That's what I want to know. You paid 11%.
Yeah.
But according to this, it is 12%. Until 2025, inclusive of 2025. So that is what I got confused between 11 and 12. Because I knew that the number.
No, there was no such a confirmation from the government. Government said that.
No, this is a big issue. Because governor knows, we all know that we approved it in Parliament. The cabinet can't change something that has, the law that has been approved in Parliament. Where is it? See, I'll read the resolution. The day we passed this DDO. This is July 1 2023. Garu Neetigna Acharya Sushil Premajayanta, right? He, as the leader of the house, presented this, if you recall. You all were in Parliament. Then I, as the chairman of the committee, took objection. I raised a point of order. Mama kiwa me yojanawa niwaradi naha garu kathanaayakatumani. Me yojanawa නෙවෙයි කාරක සභාවේ සම්මත වුණේ. අපි මේ කාරක සභාවේ සෑහෙන වෙලා සාකච්ඡා කරලා නොයෙකුත් දේවල් සාකච්ඡා කරලා ගරු අධිපතිතුමා අපි එකඟ වුණා. ඒ වෙනස් යෝජනාව තමයි සියලු දෙනාගේ එකඟත්වයෙන් අපි ඉදිරිපත් කරලා තියෙන්නේ. ගරු මුදල් රාජ්‍ය ඇමතිතුමනි එහෙමනම් එකඟ වෙච්ච පරිදි එම සංශෝධනය දැන් ඉදිරිපත් කරන්න. Okay? It goes on. Then නීතිඥ ආචාර්ය සුශීල් ප්‍රේමජාන්ත මහතා මේ හදා ගරු කතානායකතුමනි 2023 6:30 දින රජයේ මුදල් පිළිබඳ කාරක සභාවේ සාකච්ඡා කර එකඟ වූ පරිදි අද දින න්‍යාය පත්‍රයේ දිනට නියමිත කටයුතු යටතේ සඳහන් යෝජනා අංක 1 මේ ආකාරයෙන් සංශෝධනය විය යුතුයයි මම යෝජනා කරනවා. And this is the new edition. ශ්‍රී ලංකා මහ බැංකුවේ උපදේශ මත මුදල් අමාත්‍යාංශය විසින් සකස් කරන ලදුව අමාත්‍ය මණ්ඩලය විසින් අනුමත කරන ලද ශ්‍රී ලංකාවේ ණය ප්‍රතිවකරණය යන මාතෘකාව යටතේ 2023 ජූනි මාස 28 දිනතිව අමාත්‍ය මණ්ඩලය වෙත ඉදිරිපත් කරන ලද ලිඛිත ඉදිරිපත් කිරීමේදී යෝජනා කර ඇති පරිදි කෝට් දේශීය රාජ්‍ය ණය ප්‍රතිශස්තකරණය සඳහා වූ සවිස්තරාත්මක විධික්‍රම ක්‍රියාත්මක කිරීම close quote was added to the resolution. Now, what that is this. This is the debt restructuring in Sri Lanka presentation to the Cabinet of Ministers 28 June 2023, which was approved here and which was then added to the resolution that we passed on the 30th of June 2023. එතන මේකේ තියෙන විදිහට මට වැරදිලාද දන්නේ නැහැ. ඒක මේ ප්‍රශ්නේ මම ඉදිරිපත් කරන්නේ. Basket of 12 instruments of equal amount maturing from 2027 to 38 for a total equivalent to the tendered instruments nominal value, meaning no haircut, bullet payment, step down coupon profile, 12% up to 2025 including 2025, 9% until maturity. එතකොට මෙතන clarification වාගයක් තිබුණා. ඒ clarification තමයි I'm reading off the Hansard. ඒ අනුව අවසානයේ මේ වැඩසටහන තුල 2025 වර්ෂය දක්වා 112ක පොලි ප්‍රතිශතයකුත් ඉන් පසුව අවුරුදු 3ක් දක්වා 109ක පොලි ප්‍රතිශතයකුත් ඉන් ඉදිරියට වෙළඳපොළ විසින් තීන්දුව කරන පොලි ප්‍රතිශතයකුත් ලබා දෙනවා. This is the Minister of Finance presenting the bill in Parliament. මේ සභාවේ තව ප්‍රශ්නයක් මතුවුණා. අපි රජයේ මුදල් පිළිබඳ කාර්ක සභාව තුලදීත් මේ පිළිබඳව කතා කළා. 109 කියන අගය තවත් අඩු වෙනවද කියන කාරණාව සාකච්ඡා කළා. පරිපාලන වියදම් administration expenses අඩු කළාම බදු අඩු කළාම තවත් අඩු වෙලාද මේ සමාජිකයට ඒ පොලි ප්‍රතිශතයේ හිමිවන්නේ කියන කාරණය මතුවුණා. අපි රජයක් හැටියට සමාජිකයට ගෙවන ප්‍රමාණය කිසිදු වෙනසක් කරන්නේ නැහැ. Then I again as the chairman seek sort of clarification.
So, may I explain? I think there is a misunderstanding about these two concepts. One is the coupon payment given by the government for the exchange bond. So at the exchange we were given 12 new bond series. Until 2027 we are getting 12% coupon rate. After that we are getting 9%. It is for the instrument that we exchange. So that 9% is the return that we are giving to the members at the year-end balance. So
no. Because we saw. Listen to me, please, sir. Then this is obviously because there are three things. No, this restructured bonds, which is the 12 new bonds that the EPF got. That's one. Then there were non-restructured bonds for whatever reason. Then there were the new bonds issued after the restructure. They got different interest rates. So we are all aware of that, right? So that is why we wanted clarification. සේවක අර්ථසාධක අරමුදලේ සමාජිකයන් අවම වශයෙන් 109ක වාර්ෂික ප්‍රතිලාභයක් ලැබෙනවා කියලා. That is the after the step down. ඊයේ මුදල් රාජක සභාවේ මේ ප්‍රකාශය භාණ්ඩාකාර ලේකම් සහ මහ බැංකුව අධිපතිවරයාට යොමු කළාම අධිපතිවරයා සහ මුදල් මණ්ඩලයේ කියපු දේ තමයි නැහැ. එහෙම එකක් නැහැ. මේ 109 ලැබෙන්නේ සේවක අර්ථසාධක අරමුදලට අලුතෙන් ලබා දෙන භාණ්ඩාකාරවල පොලිය සඳහා පමණයි කියලා. So that is the 12 and 9 which you're saying. That is for the one of the three, the restructured bonds. එතකොට ඒ පොලිය තමයි සේවක අර්ථසාධක අරමුදලට යන්නේ. හරිනේ? ඒකනේ දැන් මම කියන්නේ. ඒ අරමුදලේ cost එක අයින් වුණාට පස්සේ සමාජිකයට ලැබෙන ප්‍රතිලාභය මොකක්ද කියලා කියන්න බෑ කිව්වා. ඒ නිසා කරුණාකරලා ඒ කරුණ පැහැදිලි කරන්න. This is precisely what is being said here. රජයේ මුදල් පිළිබඳ කාර්ක සභාවේ මෙතුමා මේ කාරණේ මේ ආකාරයෙන් මතු කළා. This is the Minister of Finance. ඉතා පැහැදිලිව මහ බැංකුව අධිපතිතුමා පිළිතුර ලබා දුන්නා. දැනට පවතින ආයෝජන වලටත් ඉදිරියේ කරන ආයෝජන වලටත් මේ ක්‍රියාකාරීත්වය ඇති වෙන්නේ කොහොමද කියන එක. ඔබතුමා මතු කළ ඇඩ්මිනිස්ට්‍රේටිව් කොස්ට් එක පිළිබඳව ඊයේ සඳහන් කරා. මේ පොලිය තවදුරටත් අඩු වෙලා ප්‍රතිලාභයට ලැබෙන්නේ කියන කාරණය සම්බන්ධව තහවුරු කළා. එහෙම අඩුවීමක් නැහැ කියලා. So the question is the return to the EPF member 11 and 9, or is it the return on the restructured bonds 11 and 9?
No, 11 was not mentioned anywhere. So the only thing is...
No, not 11, 12, sorry.
12 is for the restructured bond. Until 2027, we will get coupon rate of 12%. However, when we get an instrument, so that yield generated from that particular bond not remain for the entire life cycle of that bond. It is not 12, even it is not 9, even though that we are getting 9% after a 2-year period. So the average return will credited to the member balances throughout the period.
දැන් මෙහෙමනේ දැන් අපිට දැනගන්න ඕනේ අපි මේක පාස්
Was there something pegged on to the treasury bill rate? No. That there will be some, that was a mooted idea, but it didn't carry through.
නෑ එහෙම දැන් මෙතන අපි කිව්වේ අපි තේරුම් ගත්තේ අර්ථසාධක අරමුදලේ සමාජිකයන්ට 25 දක්වා 12%කුත් 26 ඉඳලා 9%කුත් එහෙම එකක් නෑ කියලාද කියන්නේ?
නෑ. ඒ restructured bonds වලට හම්බ වෙන yield එක තමයි කිව්වේ.
ඒක තමයිනේ ඔබතුමාලා මෙතන කිව්වේ. ඔව්. හැබැයි මේක එක්ස්ප්ලේන් උනේ මේ අර්ථසාධක අරමුදලේ සමාජිකයන්ට 2025 අවුරුද්දත් ඇතුළුව 12ක් ලැබෙනවා ඊට පස්සේ 9ක්. එහෙම එකක් නැහැ.
නෑ.
ඒක 9 කියන එකකුත් තියනවාද එහෙම එකකුත් නැද්ද?
Yeah, at the Cabinet of Ministers meeting held on 7th August 2023, it has approved an amendment to the section 14 of the Employees Provident Act, number 15 of 1958, to present to Parliament the enactment of statutory provision to guarantee a minimum of 9% annual interest from 2023 to 2026. So
2023 to 2026.
Including say 2 years. Yeah.
That's 12% එක නෑ. 12% එක තියෙන restructured bond එකට විතරයි.
Bond එකේ coupon.
ඔව් ඒක තමයි දෙක. තුනක් තියෙනවානේ restructured, unrestructured and new. දැන් ඒතර මම අහලා තියෙන ප්‍රශ්නෙට ඔයගොල්ලෝ උත්තරේ වල තියෙනවා. Restructured bonds වලට ලැබිලා තියෙන්නේ 10.75යි.
Average එක.
Bonds issued thereafter 19.92යි. Other relevant instrument 12.2යි.
13.9 ගානක් අනිත් ඒවට
13.9 bonds issued thereafter.
Thereafter
non-restructured bonds, including both the non-restructured bonds and the bonds purchased subsequent to the bond exchange is 13.9. That is what the letter that you said.
Restructured bonds 10.75.
Yeah.
Bonds issued thereafter 13.92.
Yeah.
Other relevant instruments, those are corporate bonds 12.2%. So there are two categories: restructured bonds and bond issued thereafter, including non-structured and issued thereafter.
Yeah. In our answer, we said restructured bond 10.75. Bond issued thereafter, we specifically mentioned within bracket, including both non-restructured bonds and the bond purchased subsequent to the bond exchange, 13.92. So other relevant instruments, the rate on corporate debentures, 12.20.
හරි එතකොට මේ step down profile මේ coupon profile එකේ 112 දැන් ඕගොල්ලෝ මේ hold to maturity නේ කො trade කරනවද මේක 12
112 මේක තියෙන්නේ මොකද්ද මේ
නෑ hold to maturity තමයි හැබැයි 2038 වෙනකන් යන bond series තියෙනවා එතන 27 ඉඳලා mature වෙන
මට දැනගන්න ඕනේ restructured bond එකට 10යි 75යිනේ ලැබිලා තියෙන්නේ මේ return එක.
ඔව්.
ඒතර මෙතන තියෙනවානේ 12ක් කියලා.
ඔව් එහෙම අපිට බොන්ඩ් එකක් ගත්තාම පළවෙනි අවුරුද්දට 12ක් දාලා ඊළඟට 9ක් දාන්න බෑ. cash flow එක එන්නේ ඒ විදිහට. නමුත් අපි මුළු instrument එකකටම එන්නේ instrument එකේ average return එක තමයි over the lifetime බෙදෙන්නේ. එතකොට මුලින් එන coupon වල ඇත්තටම principal payment එකකුත් add වෙනවා. subsequent 9% වල ඊට වඩා වැඩි එකක් ඇඩ් වෙනවා මොකද අර principal payment එක ගෙවනකොට එතන interest එක
මම අහන්නේ මෙතන තියෙන්නේ basket of 12 instrument bullet repayment step down coupon profile.
Yeah. So we consider entire cash flow and calculate the generated yield from that cash flow.
දැන් මේක තියෙන්නේ පොඩක් නේ 12% up until 2025 inclusive of 2025 ඒකේ මොකක්ද අර්ථකථනය වෙන්නේ
the initial 2 years up to 2027 even though we get 12% coupon rate the effective yield of that instrument is 10.75 so it is the way that
no honorable chairman I think what he's trying to say is when there's a step down you when you have to value the return on the bond up to maturity. So you take the first 2 years at 12%, after that for the next 10 years or 20 years or whatever it may be at 9%. You take all the cash flows and then amortize it over the life of the bond. So the 12%, the amortized value of 12% even in the first year is 10.75. The coupon is 12%. But so that it gets spread evenly over the life of the bond. On an annualized basis. So that is how the 12% becomes 10.75 in actual return when you calculate the return.
And after the step down 9%.
Also it will be the same because it will get amortized like over that time.
So then what happens is the parliament approved subsequently a 9% minimum. So whatever happens to these restructured bonds, the new bonds, they will get a minimum of 9%.
No, Parliament, that was not approved. It was cabinet proposal. I don't think it was approved by the Parliament. So
can you check on that?
It was decided by the cabinet. The 9%.
Now my question is a legal one because this is a this.
The one that is 12% on the coupon rate was not approved by Parliament.
12%
that was approved by Parliament.
Then what was not approved by?
It's a minimum 9% guarantee for next 3 years.
They used the 9% because over a passage of years in the past they had used 9% as a payback.
Yeah.
So they used that as a minimum benchmark.
Up to 2026.
Up to 2026.
Only up to 2026.
After that, I mean, depends on what happens to the interest rates.
So then the story that the EPF holders will get 9% throughout.
No. Honorable Chairman, we have to mention here that there is a tax portion also.
නෑ ඒක අපි දන්නවා මේ tax after tax නෙමෙයි. දැන් ඒකනේ කියන්නේ administrative costs and tax අයින් කරයින් පස්සේ එහෙම අඩුවීමක් වෙන්නේ නැහැ. හරි ඒක මේක තමයි resolution එක පාර්ලිමේන්තුවේ සම්මත වුනේ. හරි මේක නීතියන්නේ කැබිනට් එකෙන් නීති සම්මත කරන්න බෑනේ. පාර්ලිමේන්තුවෙන් තමයි නීති සම්මත වෙන්නේ. එතකොට මේ නීතිය සම්මත වුණේ මේ ડોකියුමන්ට් එකට ප්‍රකාරව. එතකොට මගේ ප්‍රශ්නේ තියෙන්නේ එහෙමනම් ඒක අපි චෙක් කරලා බලන්න ඕනේ ඒ සංශෝධනය ගෙනවද නැද්ද කියලා.
Again, Honorable Chairman, I think the context of this is the EPF was paying 9% at that time. So I think the context is that it won't reduce below the 9%. That is the context.
මම අහන්නේ මිස්ටර් ෆොන්සේකා මේක දිගටම 9ට දෙනවද නැද්ද කියන එක?
No, not digatama. It is I mean,
until 2026.
එතකොට දැන් මේ ගාන හැදුවේ මේ scenario 1, scenario 2, scenario 3 කියලා.
ඒක ඒ restructured bond එක tax ගෙවුවොත් කොච්චරද tax ගෙවුවේ නැත්නම් මොකද්ද yield එක?
නෑ ඒක වෙනම දෙයක්. participation of superannuation fund එක ඕගොල්ලෝ tax එක වැඩි කරලා 17ට තියාගත්තානේ agree වෙනවනම්. Average return on portfolio over 23 to 38. 9% scenario 9.1, 7.7, 9%, 9.4.
But that is on the static portfolio. No?
Yeah.
Participation of the DDO.
Yeah, but that is on the static portfolio which participates. But then there will be new flows which will be reinvested. So all of that will depend on the interest rates at that time.
ඒක මට තියෙන මේ පටලැවිල්ල තමයි මිස්ටර් ෆොන්සේකා දැන් ජනතාව බලාපොරොත්තු වුණේ මොකද්ද ජනතාවට අවසානයේ ලැබෙන දේ මොකද්ද කියන එක පිළිබඳව මේ එකමද නැත්නම් දෙකක්ද කියන එක. ඒ කට්ටිය අවම වශයෙන් 109ක රිටර්න් එකක් බලාපොරොත්තු වුණානේ.
එහෙම මට එහෙම හිතන්න interest rates 102 නම් 99ක් බලාපොරොත්තු වෙන්නේ නැහැ.
මෙහෙමනේ දැන් මෙතන කියවුණා 102.5 කියලා ඉලංගරත්න ඇමතුමාගේ නීතිය. හැබැයි ඉලංගරත්න ඇමතුමා ওই නීතිය කියනකොට 1958 ඔබතුමාත් හොඳට දන්නවා ට්‍රෙජරි බිල් තිබ්බේ 101යි. දැන් දෙකයිද? What was the interest rate in 1958? Right. එතකොට එහෙමනම් එතකොට මන්ත්‍රීතුමා ට්‍රෙජරි බිල් රේට් එක 101ක් තියෙනකොට EPF එකට 102කමාරක් දෙන්න ඕනේ. එකද දෙකද මන් දන්නේ. ඉන්ෆ්ලේෂන් එක කීයද 1958? එතකොට මගේ ආගියුමන්ට් එක තමයි ගවන ඉලංගරත්න මහත්තයා කිව්වේ රියල් රිටර්න් එක. නොමිනල් රිටර්න් එක වෙන්න බෑනේ මිස්ටර් ෆොන්සේකා.
මම කියන්නේ 102ක් හරි කියලා. ඒක කියනවා නෙමෙයි.
නෑ නීතිය නෑ මේ ගවන නීතියේ මේ රියල්ද නොමිනල්ද කියලා නෑ. ඒතර අපිට රිටර්න් එකක් බලන්න වෙන්නේ රියල්නේ.
Even in the act said that 2.5% minimum, if we are not in a position to pay 2.5, the government will give a credit to pay 2.5 and to pay it back.
100%, but that is true. But the EPF paid the holders negative for how many years? Negative දුන්නානේ. අවුරුදු ගානක් negative interest ලැබුණානේ මේ EPF.
But in the act it didn't say that.
ඒක තමයි මම කියන්නේ. ඒ act එක 1958 බලන්නකෝ මේ ડોක්ටර් කීයද කියලා 1958 තිබුණේ treasury bill rate එක කීයද inflation rate එක කීයද කියලා. අපි මෙහෙම කරන්න පුළුවන්.
Treasury that you all maintain the EPF fund no ඒක ආරං central bank pension fund එකට දාලා ඒකෙන් 120 ගන්න ඒතර දෙන්න පුළුවන් EPF එකට.
I won't go there.
Central bank එකනේ ලැබෙන්නේ.
Let us not open that
one other thing, Chairman, this EPF again now what's the balance size? It's about 4.5 trillion.
Yeah, at the end of the year 4.4 trillion. End of the year 2020.
And how much of that is inactive accounts? Because there was once where you all were taking the inactive into back into the government.
Yeah, there is no something called inactive accounts. Only thing is, out of 22 million accounts, we paid the interest and everything at the year end.
No, when you say inactive, now once a EPF member leaves, there obviously has to be inactive. Either dead or is overseas or something that is inactive. No, other you take the money. No.
Yeah.
So no, that over the passage of time, it was becoming a fictitious asset. They were taking it to the government revenue. Is that still functioning or not?
No, we can't give that back to the government because. So the active accounts means currently contributing accounts. If a person has 10 employments, he has 10 accounts, 9 inactive and 1 is active. So when he retires, he gets the money in all 10 accounts. Therefore, we can't say them as inactive. So, but currently contributing accounts, 1.
So 22 million accounts you are maintaining, but the working class, there's only 3.5 million that is there in accounts now. So there's a gap now. So that's 18 million accounts can't be people who have left the services and basically have not tamed the EPF account.
No, when we
So
look at...
what is the justification for that?
It is due to changing employment. So when we look at refund payments...
That's what I'm saying, because there is no one unique account now. You are having 3, 4, 5 accounts, they are losing trend of it. So why are you not sophisticated and getting, you all are looking at TIN number for all these things. That is why you all are living on somebody's, collective ability of making money.
Yeah.
And that's becoming a fictitious asset that is there in the account.
Yeah, agreed, sir. We have discussed with the Labour Department because they are doing that registration part.
But you all maintain the EPF account.
Yeah, so then we can't have a separate registration in our portfolio because the KYC part done by the Labour Department. And however, in the future, now we are discussing it. Even last week we had a discussion to have a unique number. So even in the central bank, despite one person have several accounts, we link them to the...
It's a moral obligation on you all, because those people, basically, they have a hard life. And when they get the EPF, they must get it in full. You can't have a gap of 18 million active, accounts there, which have not been claimed, if not for this problem.
No, sir, once they enter their NIC number, they can see all the link accounts, so not only the current contributing one.
I think it's happening.
Yeah, we need your support also. We wanted to change the act to send contribution electronically. Yeah, thank you.
So, Doctor, did you find what it was in 58?
Lasita has?
Yeah.
Okay.
So 1958, inflation is 2.1%, and interest rate we had only 3 months treasury bill rate. 3 months treasury bill rate is around 1.8%.
So 3 month treasury bill rate was how much? 1.8?
1.8.
1.8. So they thought that the EPF should get 2.5. No, ඒක වේරියේෂන් එක percentage එකක් හැටියට බලන්න ඕනේ Mr. Fonseca. ඕගොල්ලෝ අඩුවෙන්මනේ දෙන්නේ නැහැ මිනිස්සුන්ට. Right. Anyway, let's take it up at a later time. Thank you very much.
Excuse me, Chairman, there was a question on Direction number 6 of 2021.
Yes, I'm sorry.
That was issued to the NBFIs regarding the moratorium to be given at that time.
Yeah.
This was subsequently repealed. At that time, there had been 3 options. Given one is to restructuring of the credit facilities, other one is to facilitate early settlement, and the other one is to extend in the moratorium of performing advances. So there had been, in terms of the penal interest, there are 3 different treatments under each of these options. So without looking at the exact case, we can't give a general comment on the penal interest capacity.
So you mean to say during the moratorium, it is possible that the penal interest could have accrued?
No, that had to be segregated in terms of what option is taken, and for a certain period the penal interest has to be removed.
For a certain period?
Yes, because there had been
April 2020 to September 2021.
Exactly. So whatever that has been accrued for that particular period has to be removed.
Yes, they can't. So to simplify it, a person cannot be charged penal interest for the period April 20 and September 2021.
Yes.
They cannot charge.
That is for the first option. Second option is to facilitate early settlement where all the future...
No, if it was not early settled, or settled earlier rather, if the facility continued, then you cannot charge penal interest.
Yes, so if there is any query, you can of course write it to us.
It has come to us, we will send it to you based on this.
There is a separate department also for customer complaints. They can dig into the facility and then give a proper answer.
Thank you very much. Thank you, Dr. Veerasinghe, Mr. Fonseca, Mr. Ratnayaka, Mr. Govindasamy, Mr. Vijay Singha, Mr. Jayasinghe, Dr. Dunusinghe, and all the officials. We will meet again in 4 months, hopefully with better forecasts by our face of the central bank. Thank you very much. We took a fairly long time for this exchange, but I think once in 4 months it's not a wasted time. It's an investment, I believe, for the members also to understand what's going on and for you to appreciate the issues raised by the members of Parliament. Thank you very much once again.
Thank you, Chairman.
Thank you.
You're watching the Lifetraveler channel.